Good afternoon, everyone, and welcome to the Monday Open. My name is Mark. I'm one of the Senior Relationship Managers here at Vantage Markets Australia. I'm based in Melbourne. We also have my colleague up there in Sydney. How you going, Jeff?
I'm good, Mark. How you doing today, mate?
Good, mate. Good.
Good.
So the way we'll be structuring things today is by covering the important economic events that occurred last week, as well as the upcoming events to look out for this week and their impact on price. We'll be then moving on to some technical analysis, discussing potential trade opportunities, and finally concluding with some Q&A at the end. I'll pass it over to Jeff to kickstart.
All right, cool, everyone. Thank you for joining us today on the live stream. As Mark's already gone through, we're going to go through last week's events, this week's upcoming events, do some techs, and then answer some questions at the end. So last week we had the tariffs was pretty much the key word for last week. We had Donald Trump announce and then remove and then announce and remove tariffs on Canada, Mexico, and China at various times of the week. I think it was 25% on Canada and Mexico originally and 10% on China. There's already a 60% tariff on China from the States. So don't think that we're starting from a zero base there. He's removed the ones from Canada and Mexico for now. But as someone mentioned to me this morning, we think that Donald Trump might be using these more as leverage for other things rather than simply just trying to get that budget into balance. This morning or last night in the States, we also had Trump announce a flat 25% tariff across all steel and aluminium imports. That obviously impacts Australia. The last time he was the Prime Minister, he announced the same thing, and he was kind enough to exempt us. He hasn't exempted us yet. That's why the Australian share market had a little bit of a dip today, because some of our big aluminium and steel producers were a little bit upset by that news. I think the headline on news.com was ASX loses $14 billion in market cap, but the reality was it was a 0.5% fall. So it was pretty moderate in the scheme of things. We'll see how that plays out. Obviously, the politicians are getting in a little bit of two-way. Joe Hockey, I think, was the foreign minister the last time that Trump was the president over there in the States, and he managed to be the one who got us the exemption. We'll see if the current chap, who I think is Kevin Rudd, which is a name that we'd all know, we'll see if he can manage the same thing. That's it on tariffs. Last week we also had the UK MPC, which is their version of our Reserve Bank, cut UK or English interest rates by 25 basis points. In this statement that accompanied that, they said that there were more cuts to come. So obviously that's why sterling didn't have the greatest week last week. As we've said before, and we'll reiterate, is the flow of funds in currency markets is generally to currencies with higher interest rates and away from currencies with lower or lowering interest rates. And then finally on Friday, we had US non-farm payrolls, which printed mixed. We had the payroll number come in softer than expected, but the unemployment rate managed to dip itself from 4.1 to 4.0%. Traders in the currency markets were looking at the unemployment number, whereas traders in the equity markets were looking at the payrolls number. So equities were weaker, whereas the US dollar was a little bit stronger on the day on Friday. So that was last week.
There was also some revised data, I believe, in December.
They're always revising that data. It's hard to believe when it's real.
Yeah. I think it was like 300K, over 300K. I think the one before that was like 260 or something. But
They revised it down.
I think the market did no, they revised that up. That was stronger than expected.
Yeah.
I think that played a factor, though.
Hard life being a trader, seeing how you understand all those markets and numbers. All right. I encourage you guys all to see the press releases that accompany the non-farm payrolls report. It's about 26 pages long. This week is a little bit more US-centric, barring any more comments about tariffs from the Don. We've got US CPI that comes in on Wednesday. That should have a nice little impactor on what the market thinks the Fed will do at its next meeting. And then on Thursday, we've got the US initial claims and the retail sales numbers. So retail sales will be a really good, look into how the US consumer is going in terms of their spending. If they're continuing to spend, that would mean that interest rates are not too tight. That's the way that markets like to look at that sort of stuff. Just on interest rates, I'm on the view that in the States they're kind of done for cuts. I think personally that we've seen the last of the cuts. I think the futures markets are still pricing in one more this year, but futures markets are futures markets. I think they're wrong. I think they're done. I think the next move on US rates will be in Q3 or Q4 of this year, and it will be up.
Big call,
That's
Jeff. I'm actually the opposite to that.
mate. Every market there's a bid and an offer, right? So that's
That's why
that's
there's a
how
market,
markets
yeah.
work.
I think
um,
the CPI will be big though this Thursday. I think that'll be like a very important number that the markets are keeping an eye on. So
I
will sort of
can't
be
see
the
how the
deciding.
Fed can. I can't see how the Fed can do anything while he's putting on and taking off tariffs left and right.
Yeah, that's another factor as well. Yeah, I guess.
And I mean that's kind of more important than 0.1 or 0.2 on a CPI number. I mean, if we're talking about a 25% tariff on something, I mean that's a huge increase to price. Um, Everyone knows that when they increase tariffs on imported goods, the local producers simply raise their prices to match. That's why the tariffs are inflationary. So if he's putting tariffs on something, prices go up. If prices go up, whether that feeds into CPI from last month or from 3 months going forward, the Fed will definitely be keeping an eye on that. So that's
Yeah.
what's coming out this week. I think the dollar is going to be interesting. I think gold will be interesting. I think they're two of the currencies that you're talking about in technicals, right, Mark?
Yes, correct. We'll go
Excellent. You
over
go
them
for it.
now. All right. So quickly, just share my screen. Let me know when you can see my screen, Jeff.
Yep.
All right. So we'll be covering dollar yen, pound, USD, and gold. So we'll start off with the dollar yen. So you can see here weekly chart. So the yen has actually been stronger the last couple of weeks because they are the Bank of Japan are talking about further hiking rates all the way up to 1%. So that's strengthened the yen quite a bit actually the last couple of weeks. So that's why you sort of seen this sell off here. And so this is a weekly chart. We're seeing a crossover here on the EMA, some bearish momentum here. So the outlook for dollar yen is bearish on the basis that the yen will continue to strengthen. However, we'll wait for a little bit of a retracement back up into those EMAs here before looking for any shorting opportunities. So it really depends on whether you're you're aggressive trader, more conservative trader. The more aggressive trader, you would look to short around these levels with stops about or risk management around these levels here, just above that high there, and take profit about this level here, 149.50s. For those of you that are more conservative, would wait for a retracement back up to this area here, which was previous support. So once the price gets back up to here, and you do find some resistance, you can place your stop above that level or even above these highs here. And you can see here there is a cluster of EMAs. So if you do decide to wait for price to come back up into this region, first take profit targets will be here. Second take profit targets will be around here, around the 149.50s area. So but the overall trend for dollar yen is down at the moment. What's your opinion, Jeff?
Well, I mean, on a fundamental note, one of the things that I heard this morning from someone equally old and cranky that still sits on a dealing desk is that the MOF the
Yeah,
MOF might be a little bit more inclined to intervene to support the yen, given what's happened now. So the last time there was big intervention in dollar yen, like big, not the very last time they did intervention, but the last time they did really big intervention, it didn't do too well because the market was very, very bullish dollar at the time.
yeah,
The Ministry of Finance is said to be a little bit more open to trying intervention now when the bias has moved a little bit towards their way. So instead of having to spend $1 billion to move at 3 cents, they might spend the same amount of money to move at 6 or 7. Um, I'm of the view that the Ministry of Finance would like dollar yen to be closer to 130 than 150. That's a long way off from where we are now, and obviously that's not going to get there in a week or two. But obviously, where it is now is not really helping their exporters very much. So, in
That's right.
terms of
Yeah.
the way that it works in Japan, the Ministry of Finance is the one that makes the intervention decisions, and then the BOJ is the one who actually implements them. So it's like here, the government would say the Aussie dollar is too weak, and then instruct the Reserve Bank to buy the Aussie dollar. So the Ministry of Finance guys are actually really quite important with their comments, and probably with intervention and currency, they're probably more important than the BOJ guys, because the BOJ guys are just execution, whereas the Ministry of Finance guys are strategy.
Yeah. Also, one other thing to look out for is the CPI data this Thursday as well. That can play a massive factor, especially if it prints lower than expected. You'll likely see a sell-off in the US dollar, because if that does happen, markets will anticipate that the Fed may cut rates sooner rather than later. Obviously putting aside all this tariff stuff, which is uncertain at the moment, but yeah, it's keep an eye out for CPI. We'll move on now to pound USD. So yeah, you can see here price made a double top into that EMA here. We are sort of selling off at that level at the moment. Now, we did have some news out of Bank of England last week, so they did cut rates by 25 basis points. They are expected to cut another 2 times by 25 basis points. That's what the market's pricing in. So this is weighing down on the pound. Also, we had some slight dollar strength on the back of the non-farm payroll figures on Friday. So yeah, so it is putting downward pressure on this pair. So yeah, I do this pair further falling potentially into this area here of 121.64. Probably be a good idea to maybe potentially take some profits off the table at this level here. You probably see more clearly on the 4-hour chart actually. So first level here, second level there. Place to manage risk would be just above this high here, because if price comes all the way back up there, you don't want to be in the trade anyways. So that's a good area to manage your risk. And yeah, the overall trend for this one is down at the moment.
I think
Any
the only
opinions
currency
on?
that looks, yeah, I think the only currency that looks worse than sterling at the moment is the Aussie dollar.
I mean, they're all sort of all the major pairs: Euro USD, Aussie USD, Pound USD. They all sort of look the same at the moment. They're all sort of just downtrending on the basis of US dollar strength.
Whereas the euro seems to be stabilizing a little.
Yeah. So moving now onto gold. So with gold, you can play this 2 ways. So you got the counter trend traders and you got the trend traders. So if you're going to be counter trending this one, which is shorting, we just give me a second. I'll just crunch up that EMA. All right, so we are starting to see some bearish divergence here on the weekly chart. So yeah, price made a higher high, but this one failed to break this level here. So we are seeing some bearish divergence. And if you are, so if you're going to be counter trend trading this, which is shorting, your potential targets will be this area here, stops above the highs here. I mean, I would caution against doing this because it is a pretty strong trend, but that's why the market moves, because there's different sort of traders. You got counter trend followers. For those trend following traders, you clearly got a support level here. So, I mean, if you wanted to put your stop below there, just as risk management and target potential, take profit around these areas here. Potentially even a extended target to the $3,000 mark, which it may take it a couple of weeks to get there, but I think it might eventually see that level if it does keep going at the moment, because it is pretty strong momentum. What's your opinion on gold, Jeff?
It's hard not to be bullish. I don't know. I keep coming back to who's left to buy it. And I got an answer to that question this morning. Is that I was reading a Bloomberg article that said that Japanese gold listed ETFs were net buyers of gold for the first time in 4 years. So these guys
Well,
didn't buy it last year when it went up 26 or 27%, and have just entered the market now. So that means two things. Firstly, they think it's going higher, and two, they're worried about inflation in Japan. So they're two very interesting things. I was the same article was talking about how the middle of the Japanese government bond curve, that's the fives to sevens, we're seeing a little bit of weakening as well. So what they were proposing was that some of these guys are moving money out of the middle of the Japanese bond curve into gold. But I think whenever you see anything that's the first time in 4 years, it's got to start to ring some sort of a bell. So that maybe that answers my question as to how far it goes. I'm still of the opinion that we're at 3,000 by Easter. Um, for I just can't see any reason for it. The only way it's going to knock back is if US inflation comes in negative, like literally not worse than
yeah.
expected. It needs to be deflationary, and I can't. I think it's expected to go up 0.3 this week for the month, and I don't think it's going to be minus 0.3.
Yeah, I mean, just to add to that, we are in overbought territory here as well. The last time we saw that was in October. So yeah, just to recap, counter trend traders shorting around these levels, stops above here, take profit around these levels, and for those trend followers, yeah, you look to go long around these levels, stops below here with the extended target, yeah, about the 29.50 area. So yeah, that's pretty much about it for the technicals, Jeff. We'll go to the Q&A now.
All right, cool. Do that. So these are just for you guys that haven't watched this before. What we do is that Mark and I are speaking to clients all week, and often we get questions that we think are useful for a wider audience, which we share here. So question one, how do tariffs work? Tariff is basically just another word for tax. So how it works is that a country will impose a tariff on either another country or on a physical good, and they will say that they are collecting a certain percentage of tax over that particular product for the foreseeable future or for a particular time frame. So what it does is it increases the value. That tariff goes to the government of the country that has imposed the tax or tariff. So for those of you that have been around for a long time, you'll remember the tariffs or the tariff wars from a long time ago. What actually happens is if Trump says tariffs on China, and China have been doing this, so like literally within 12 hours of him imposing a tariff on a product in China, they've been matching the tariff, playing kind of a zero sum game on that one. And that's what will generally happen. The other thing that happens is that the object of tariffs, or what it's supposed to do, is to make local competitors a little bit more cheaper, which means that people are buying local instead of foreign. Basic economic theory would suggest that that's not the case, and that people will just increase their prices to be at or just below the imported more expensive price. That's where the inflation comes in. So if you have, for instance, corn that you can make at home or you can import, and say, for instance, and for argument's sake, the price of imported tariffed corn is $3, but we can produce it for $2. Our producers will increase the price to $3 to max. Or the nice little economic phrase is to maximize utilization, and they will do that all day long because they can. So tariffs are simply inflationary. There is generally no good that comes out of them, and they take much longer to unwind than they do to implement. That's tariffs. You want to do number two?
Yeah, sure. So number two, what is NFPs, so non-farm payrolls, and how does it impact the markets? So non-farm payrolls is actually very important. It does provide some critical insights into the US jobs market. It is released monthly, usually every Friday at the start of the month. It does tend to trigger significant volatility, yeah, impacting the USD usually. So the way this works actually is, so you have non-farm payrolls, which is released, and at the same time you have average hourly earnings and unemployment rate. So let's just say they all come out in favor of a healthy economy. You'll usually see the US dollar rally on the back of that. Reason being is because the economy is expanding. Fed will likely either hold rates or increase rates in today's in today's sort of like situation. So if it did come out negative, let's just say non-farm payrolls came out negative, average hourly earnings came out negative, and unemployment came out higher, then you would likely see a sell-off in the US dollar because the Fed will likely tend to start thinking about cutting rates if that does happen because the economy is contracting in that case. So yeah, I mean, non-farm payrolls, like the markets don't just look at non-farm payrolls as just, like one data piece. They look at all three of those and they sort of try to piece it together to indicate what's going to happen.
What
That's
I've
yeah.
noticed as well is that which one of those numbers is the most important gives an indicator of the market mood. So I think as inflation becomes more important, that average hourly earnings number is going to be more important than the actual number of jobs.
Yeah.
If average hourly earnings increase, people spend more.
Yeah. What's also unusual at the moment is like generally like the indices they do react positively to a positive figure, but given these days they would react positively if it goes down. If non-farm payrolls comes out negative, you'd likely see a rally in indices because that indicates the Fed will or might cut or more likely to cut rates down the track, which usually gives stocks a bit of a boost. Yeah.
God, those stock traders, very smart people. All right, everyone. Well, I think that's it for us today. Thank you very much for listening and putting up with us. This particular live stream will be uploaded within our trading room, which is accessible to all of our funded clients through the client area. It'll also be uploaded to our YouTube channel, so do feel free if you did miss out on it to watch the redraw there. Additionally, our team write a daily update of overnight market moves every morning, and that we aim for that to go out at 10:30 in the morning Eastern Standard Time. I'm on that this week, so any typos, please do blame me. We also do the weekly technical video every Monday that is uploaded to the private to the trading room. So if you haven't had a look at the trading room, I would urge you to have a look in there. There's plenty of resources and education there for you to have a look at. At Vantage, we're also always trying to educate our traders and about market moves and about economics and about what's going on. And from our benefit, for our perspective, we want you guys to be better traders than you possibly are, and that's for everyone, right? The other thing I wanted to mention is that we have announced our partnership with the F1 Ferrari team today, I think. So we will be sponsoring Ferrari going forward. So hopefully that means I get to go to the Grand Prix in Melbourne and see you there, Mark.
Definitely, yeah.
All right, no worries. Well, look, thank you everyone for watching, and we'll see you again next Monday. See you, Mark.
See you, Jeff. Bye.